2 weeks ago, I published a video on how President Trump's new tax bill is going to change our economy. 1 week ago, I published a video on how the new tax bill creates investment opportunities. Today, we have a much more concrete understanding of where the White House is putting money and how that creates investment opportunities. For example, the White House just said that they're going to be paying hundreds of millions of dollars to the largest AI companies in the United States to help the government build their AI. That's why today, I want to do an updated video on how you can find investment opportunities through the Trump presidency, not just from the tax bill, but from the updated economic agenda that we finally can understand. Again, my goal is not to talk politics. There's enough people on the internet that do that. Instead, I want to show you how this economic agenda can create an investment opportunity for you. Here's why this matters. In 2025, our economy is expected to be $30 trillion big. That's our GDP. And every smart investor wants to own a piece of this economy. But more specifically, they want to own a piece of which piece of the economy is growing. And the largest spender in our economy is not Amazon or Tesla or you and me, it's the United States government. So if you know where the government is allocating money, you can know where our economy is growing, and that could be an investment opportunity for you. The cold hard reality is when President Trump spends more money on things like mass deportations or defense spending for the military or on big tax breaks, some people get very angry, but other people get very rich. The challenge is it's hard for regular people to understand what's happening and how those things create investment opportunities, because that's what Wall Street is spending so much money and time doing, but not anymore, because in this video, I'm going to break it all down for you. That way you can understand and find those opportunities for yourself. Now, full disclaimer, investing is risky. You are never guaranteed to make money when you invest, and I'm not a financial advisor. I'm just a random guy on YouTube, so make sure you always do your own due diligence. But some of the things that I talk about today might make you feel a little bit uncomfortable. But my firm, Briefs Pro, believes that a good investment makes 3 types of sense. What that means is it must make legal sense, it must be legal, it must make financial sense, and it must also make moral sense. I am not going to be the judge of your moral compass. There are certain things that I would refuse to invest in, but that's my moral compass. You have to be the judge of what's right for you. Now with that, let's jump in. The 7 shifts in government spending that I have found are: number 1, in AI and technology, number 2, into financial services, number 3, into mass deportations, number 4, into defense and space spending. You'll see why I put space with defense. Number 5, into cryptocurrency, number 6, into energy, number 7, into tariffs. Now let's break down where the investment opportunity is in each one of these. So let's start with number 1, AI and technology. The Department of Defense just allocated hundreds of millions of dollars to Anthropic, Google, OpenAI, and xAI to help the government accelerate its adoption of AI solutions. In other words, it's classified, but it looks like the government wants to get more hip with technology and artificial intelligence. But that's not all. The Trump administration has been working to bring billions of dollars of investment into AI and technology into the United States. Not to mention the hundreds of billions of dollars that are already being invested in AI infrastructure. We already know that private companies have been dumping money into AI and AI research. That's not new. But what is new is how aggressively the United States government is starting to invest their own money, meaning our tax dollars, into AI, which means the tech companies that are leading the charge in AI and AI infrastructure could be seeing more contracts from the United States government, and those AI infrastructure companies like data centers could also be seeing more government dollars to fund that growth. This brings me to number 2, which is financials and financial services. By the way, for those of you investors who want to know where investment opportunities are changing in 2025, in a Trump economy, in all these technology changes, I'm doing my biggest investor workshop of the year on August 12th. It is a free workshop where I'm going to be going over how the investment opportunities are changing and how you can find better investment opportunities today based off of all the changes that we're seeing in the economy. This workshop is free. I'm doing it twice on August 12th, once in the morning at 10:30 a.m. Eastern Standard Time, and again in the evening at 8 p.m. Eastern Standard Time. So if you'd like to join, you do have to register. We always fill up seats completely. So if you want to register, I have the link for you down in the description below. When it comes to financial companies, in January, President Trump launched a 10-to-1 deregulation initiative. What that means is for every one new rule the government passes, the government needs to slash 10 existing regulations, and this especially applies to the financial services industries, meaning banks. A lot of people have very strong feelings about this because after the 2008 Great Financial Crisis, banks were hit with a ton of regulations to make things safer for for consumers. The whole original idea is that these regulations are put in place so that banks have a more difficult time to commit fraud or to cause a big financial crisis. But the flip side to these regulations is that regulations make it more difficult to do business, and some banks are saying that these regulations are making it very, very difficult for them to do business. And today, under the Trump administration, we are seeing the biggest rollback of financial service regulations that we have seen in decades. And this loosening of regulations on banks has a lot of investors excited because they're hoping that this means that banks are going to be able to make more money easier, which would ultimately help the investors of those banks. This brings me to number 3 on the topic of deportations, which is another very touchy one. When President Trump was running for office, he promised the largest mass deportation in US history, and he's working to keep his end of that promise. As soon as he entered the White House, he passed an executive order authorizing federal agents to ramp up deportations. But that was just the beginning. After President Trump just signed his new tax bill, that tax bill allocated more than $200 billion towards ICE agents and deportations. Now let me explain what that means purely from a financial standpoint. If people are being detained by ICE agents, those people have to stay somewhere, and that place is often private prisons, which is why we saw private prison stocks rally after President Trump was elected, and then they rallied even more once the new tax bill was passed because these private prisons knew that they're going to be getting more money from the federal government as more people are being deported and being detained in that process. And yes, in case you were wondering, some of these private prison stocks do trade on the stock market, which means anybody could invest in them. This brings me to number 4, which is the most out of the world, literally, defense and space. When President Trump signed his most recent tax bill, it also allocated $150 billion in defense spending. That means the government is going to spend more money on bullets, guns, tanks, armors, and jets, and these things are produced by companies in the United States, and many of these companies also trade on the stock market, which means these defense companies will probably be seeing more contracts or bigger contracts from the United States government, which means more money allocated towards them. But this is where things start to get a little out of this world, because inside of the defense spending provision, there's also money being allocated towards space exploration and space defense. See, President Trump has been very adamant on building a space force for the United States, and the Space Force is a new branch of our military that protects the United States in space. And more funding for the Space Force means that the United States government is going to be spending more money on rockets and space satellites and space research. And if you think that's crazy, it looks like we're just starting to scratch the surface on what could be happening in space, because now companies are looking to invest in and build data centers on the moon. So you bet that space investments are going to be an interesting thing to pay attention to over the next decade, which brings me to cryptocurrency. During President Trump's campaign, he talked about making America the crypto capital of the world. Well, after he entered the White House, President Trump established the United States Bitcoin Strategic Reserve. That means, yes, the United States government is now building their own Bitcoin fund, which created a whole new level of credibility for Bitcoin and cryptocurrency. But that's not all. President Trump then went on to say publicly that digital assets are the future. Now, this shift into cryptocurrency is interesting because we did see a tough time for the government to get more of their crypto regulations passed, because we did see the Genius regulation fail. The whole goal behind this bill is to add more legitimacy to stablecoins, maybe for the United States to create their own potential stablecoin, meaning a cryptocurrency for the United States dollar. But after some changes, we did see the Genius bill get passed. So the United States is looking to innovate in cryptocurrency, and we're going to see where that ultimately goes. Which brings me to the 6th shift, which has to do with energy. President Trump wants the United States to be more self-reliant when it comes to creating energy, and to help make that happen, the United States government is allocating more money into energy production. It all started when President Trump signed a presidential action titled Unleashing American Energy, and the goal with this presidential action is to increase the amount of oil production inside the United States, which is obviously good for those oil and gas companies that are producing that energy inside of the United States. Now, for full transparency, we haven't seen an increase in oil drilling under the Trump administration just yet. But some investors are hoping that if we see those geopolitical tensions around the world end, that could then finally incentivize the oil and energy companies in the United States to drill, baby, drill, and make more money by producing oil in the United States for people in the United States and maybe even around the world. And this brings me to last, but definitely not least, number 7, tariffs. President Trump has unleashed a tidal wave of tariffs on more than 100 countries around the world. Now, full disclaimer, we have no idea which tariffs are going to be here to stay and what's going to last. But we do know that the government's goal with these tariffs is to bring more manufacturing and jobs back into the United States. Now, whether or not that will happen is a different story, although manufacturing today does believe that we will see more manufacturing in the United States, partially due to these tariffs. But let's go down the rabbit hole for just a second. If these tariffs work to bring more manufacturing and jobs back into the United States, what does that mean? That means that companies would need more warehouses, they would need more manufacturing facilities, and they would need more transportation from one plant or facility to the other inside the United States, which could mean more money going into those industries. Well, that could also create an investment opportunity. Why? Because that means that the companies that are providing the manufacturing equipment, the tools, and the buildings could see an uptick because of the growth in that spending. So if those tariffs work to bring manufacturing into the United States, again, that could shift where spending goes, and that could impact the profits on certain companies that are building the products to help with that manufacturing. Again, we'll see what ultimately happens with tariffs and with jobs, but it's something that you want to keep your eye on. Now, we know where these shifts are happening, but this doesn't guarantee that an investment is going to be profitable in each one of these shifts, because the second thing you want to pay attention to now is the actual investment that you're making. Because you might say, hey, there's going to be more money going into AI and technology, so I'm going to invest my money into Google because Google's spending money on AI. Well, that could work. But if Google doesn't do a good job managing their money, or they don't keep up with demand, or that company just does bad and Google goes bankrupt, this industry might benefit, but that one company could fail. Now, I'm not saying Google is a bad investment or a good investment. I just want you to understand that this is the first part of your analysis. The second part to your analysis is actually analyzing the specific stock or the ETF or index fund that you're considering investing in. And that's where financial analysis comes into play. Again, this is one of the things that I'm going to be going over on my investment workshop on August 12th. So if you have not registered for it yet, there's going to be so much value. It's going to be a lot of fun, and we're going to have a ton of people there. So if you have not registered for that on August 12th, again, I have the link for you down in the description. President Trump signed the One Big Beautiful Bill Act into law. This big bill will bring some big changes to our economy, starting with some big tax breaks to big funding for certain things like more deportations. And the reason why you want to pay attention to this bill is because it goes into effect retroactively. It goes into effect January 1, 2025.